Hello, good morning, good afternoon, good evening. Depending on your time zone, this is your host, Dr. Peter. As usual, we're going to be looking at our instruments starting with DXY. We are going to brush through and look at what the market is going to offer us in the coming week. Permit me to start with the monthly time frame. For quite over a year now, we have been in this consolidation. This, by the way, these are monthly candle formation. You can see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, let's say 12, one from here. About a year now, we have remained within this consolidation. And so we can only trade what the market will offer us. When we had a great descent, yeah, we had that, but now we are within this consolidation. So what do I think that the market wants to do now, based on what we are seeing so far, the price action? By the way, this is still forming. It has not closed. Like I said, it's a monthly candle. It has not closed. But so far, we are seeing this candle pushing down. That's the dollar falling to erode the low here. Breaking the low here also is a big statement that the price may be going all the way down to break down once again. But it's not as simple as that. From the analysis that has been given, like I said, that we have a 60% chance of the price going to the downside and breaking down. And there's a 40% chance that the price will continue to give us another leg to the upside. So are we going to see that this movement to the upside is A and this is B, and that we are going to see a C? That's the one possibility. Or are we just going to go down and break low such that after completing this move here, this becomes our A, this is a B, and this is a C, and we're now having the last 5 waves to the downside to break low here before we begin that correction. So what we are saying is that this market is due for big time correction. We may have started the correction or not. If we have started the correction, that means it's the beginning, A, B, C to the upside before we go down. Or that after breaking down, that's when we now start the big correction. So that's either way, we are going to start the correction, either we have started or not. So that's what we are saying. Don't expect that this will continue to drop. No. On the higher time frame, no. But on the lower time frame, it does look as if we are going to break down. But we're going to go into it and understand why the 60% chance of we breaking down is still valid. But we are not going to assume that it's going to do that. But we have to look at where are the landmarks, where are the levels we expect price to tick and what to expect. Now, the fact that the price had broken down this monthly candle here, by piercing it, it's the first signal on the monthly time frame. If we go to the weekly time frame, any information that we can gather here. So the only information I can gather here, we are seeing now this trust downside are broken out of this consolidation here. 1, 2, 3, 1, 2, 3 weeks consolidation or 4 weeks consolidation, price had broken down from it and has given us this reaction now. So when you look at the weekly time frame, what you will see a sell. But on the lower time frame now, we don't see that sell anymore. We are seeing a buy. From the DXY, you are seeing that the DXY is going to gain a little strength to the upside. And when that happens, where are the levels we expect? If we are still going to break down to the downside, where are the levels we expect a reaction to the downside? We should expect at the tip of this candle here, this bearish candle, that might be the first area to suspect. And the second area is where you have this green candle here, the base here, and the tip here. Between that frame, we should see the reaction back to the downside if we are going to continue to go down. Now, it's not as simple as that, but we again have to look at other things. We are seeing the first sign, it's the first, the reaction to the downside, breaking the low of the month. That's the first one. That we are broken out of this consolidation. That's the second one. Now let's look at the daily time frame, if there's anything also to gather from the daily time frame here. For this time frame, we are seeing this gap also here. And like I said last week, I said if we fill in this gap immediately before we go down, there's likelihood that price will go back to the upside. But if the price should pull down before going up, then we might be seeing price coming here to fill this area. This area where you see the gap on the daily time frame, it's a very high probability area for price to navigate to. I think price will fill this before giving us a reaction. So price will fill this area gap before giving us a reaction. So where we don't want price to break is actually this area. If we are to sell and price to fall more, it's going to buy temporarily, filling this gap before dropping. And the way and manner the price is going to go up also will be suggestive. If it goes up correctively, giving us an ABC reaction to the upside, then it will be a good sign that what they want to do is to drop the price further to break down. Now, so the gap has signified an area that this movement to the upside is going to get to. Then another thing is that if you look at this as an A, B, and a C, the movement to the downside actually had broken 168. That's another sign. But of course, it's a sign, maybe 60% sign. We are just gathering all these signs here and there to tell what the price is going to do. So movement here, and down here over 618. 1.618 is over 8. So for now, what we should be looking at, you don't want to sell anymore. You don't want to sell Dxy anymore. You want to look for this pullback to continue to get to this area. That's what we expect now. So like I was telling some people during the week, I said, for me, we should be looking for dollar to gain a little more strength, either from here or they're going to break up again or break down again before pushing up. And that is what we are seeing now. So we are seeing that push up, and this is going to go further to the upside. Now, looking at euro dollar, I don't want to waste more time. I'll just continue to give you this. But again, on the monthly time frame, the sign that we're picking here, we're picking this sign here now, that the price had broken this candle to the upside. So the tendency is there for us to go more to the upside, but it's 60% chance of going up more to the upside. And we can still continue to go down as an A, B, C. But where we don't want to break ultimately is this area. So once you break this area, that means price is going to push more to the upside. But for now, you shouldn't be looking for a buy on Euro USD. You should be looking for a sell. And that sell is better. We should look at it collectively to the downside as an ABC or a WXY, whichever we'll get. Now, on the weekly time frame also, if you look at the fib relationship here as an A, B, or WXY, it has gone beyond 168 extension, slightly beyond 168 extension. That's another sign. The price came here, and we are expecting that we are going to get a reaction because there was a gap here. And let's see on the daily time frame. That was the area we targeted for our take profit. Yeah, there's a little gap here. A little gap occurred here. This price thing, this is the gap here. Between here and here, price just gap down on the 4-hour time frame. So if you look at the 4-hour time frame very well, you will see it. So this is the area I expect. Now, there's another thing that I want you to see here, which price is trying to give us an intention. I don't expect, I thought that price probably would hold this cluster of resistance here and without breaking it. But the price breaking above to grab liquidity above this resistance also is a signal that the price may have the tendency to, or preponderance to push more to the upside, but not immediately. Not immediately. So now we have here a diagonal that may be an A, B, still a C, but that C is a suspect because that's broken 161.8. So it may be the third wave that the price had given us here. But of course, for a C wave, we expect a 5 waves configuration for a C wave. Even if you're saying a C wave or the third wave, it's still 5 waves. 1 or 2 or A, B. Now this has to be 5 waves, either C or the third wave. It has to be a 5 waves format. So, and that's the rule. So we have 1, 2, 3 here, 4 to this low, and on the daily time frame, they broke up because we were expecting that price may do that. They broke up silly, and now they are broken this 4th wave. So I was suspecting that may happen, but there was a low volatility. I wasn't expecting that there would be a sudden, upthrust. So, and we had that. That's why I gave the instruction, because we should allow them to finish their nonsense. And I said, even if they break the top, we'll still sell. So, and that was why I gave the sell stop before it even got here. So waking up in the middle of the night, and I saw that the price actually had done that. So now we should be looking for a sell. We should be looking for close to 250 pips drop to almost 300 pips drop. Recently from this low, we might still catch very close to 200 pips to the downside. From this low, we might catch that. So there is good pips to be taken to the downside. What will now tell us that this is no longer a buy, that the price will continue to fall? It's a break of this primary 2 of wave 3 here. Price would not break it if we are to go to the upside. As a matter of fact, what we should be correcting is this wave 3. If it's wave 3, we should correct it, not the entire run. Not the entire run. We should correct this wave 3 as a 3-2 before we push more to the upside. Pushing to the upside is not what I want you to think about now. I want you to think about that what we want to do now is to sell. If it becomes an impulse, then it's going to break down. If it becomes corrective, it's going to push up. But I just give the analysis for you to know that the tendency is there for it to actually continue to go to the upside. Now, stepping down to the 4-hour time frame. So what we expect here now, so we are seeing this reaction, that's the break. Now, if the price would correct to the upside, it will give us an opportunity around this area to look for further drop. So, which means that you can add another position if it will correct. Otherwise, they may just continue to fall. Let's see on the lower time frame if we are seeing any sign that, let's look at 15 minutes time frame. The only time you can begin to think of a possible correction. So it's just falling. This thing is just falling. It might just continue to fall like a knife like this. I can't see anything that is giving me a sign that is going to pull back. But when it's ready to pull back, then we should look for opportunity to add to our position. Probably if you draw a trend line to the downside, once that is broken, you should be spending at least that maybe they're going to correct. But for now, it will just continue to fall. And this is what I expect, that it will just continue to fall without probably giving us any opportunity of looking for a sell. See what it's doing. So they went up sharp, they came down sharp. So, and they had been falling. Now they are broken this low. Breaking this low, yeah, they've done that. And I believe if they will give us opportunity to enter, you know, for another position, it should be between this area, between here and here. After the break of this, we should get more position. So we'll take our chances as it comes. Okay, this was the gap I was talking about. It was no, it wasn't this gap. It wasn't this gap. Let me see. That we got out. Should be on the other side. Yeah, this was the gap here. That was the small gap the price created. They will always serve as a magnet. So on the DXY, of course, we had seen that gap, but that give us where the correction would get to before we want to fall again. So if you look at pound USD, the same scenario is what we expect. Pound USD now, there's a break to the downside. So it's almost even, it has not broken its own fourth wave now. It has not broken its own fourth wave. So there is a chance it's going to break correct. If they're going to correct, we look for more sell or further drop. We are going to break this low before we even have any chance of going up again. If we're going to go up, this low will have to be taken. So it's going to be a good drop. The price will do that, will be in that move for almost a week and a half to 2 weeks. If it takes that form, then you know it's more of a correction. It's more of a correction. Those are the signs. Okay, let's look at what the price did. For here. So when the price began to move, you can see that this movement to the upside took like 2 weeks to the upside here. From this low, 2 weeks to the upside here. And this is looking like it's going to break the top again. This is looking like it's going to break the top on the pound USD again. So they're looking like that. It's going to break the top. So this low had not been taken. If the price wants to correct these would have to go, and they have not done that. So once they go up and break the top again, the sharp drop will take the whole of this, break this, and before anything. So it's still a long time. Now, within 2 weeks, they have done this. The next 2 weeks, if they drag correcting, then you know it's a correction for more upside. But for now, let's just deal with that correction, or the so-called correction, and take a sell. So now you should not be buying. You should be looking for a sell. Nzdusd is the same scenario. Sell. It looks more clearer here. Yeah, it has broken also low. When they are correcting, of course, you'll be seeing some negative. And that negative, it's a blessing. It should be a blessing for you to have that negative in that case. Let's see how it corrects. It's not going to break the top here. If it corrects, then we should look for further drop. USD JPY as a yen, USD yen. The strength coming to the dollar also looks like this may be going up. If we look at the 4-hour time frame here, let me zoom. It has all been too corrective for me. So we have been in this correction. So it has been too corrective at this. So it looks like a complex correction of the fourth wave, which it didn't take this low. It almost got there. It didn't take this low, and we are getting this reaction. So one can take a buy cautiously take a buy, and this is your low for now. I still expect price to push towards 161 before, or 162 rather, 162 before we see that fall. So it might just be a sharp movement to break the top before they drop this price. Euro dollar, sorry, Euro JPY, Euro yen, Euro yen for me also is correcting. This big drop is, I don't see it as a drop to continue to go down. I see that from here, after this correction, so this might be, okay, let's just zoom more. Yeah. After this initial move looks like a 1, a 2 here. Now, within the third wave, you can say, if you call this the C leg, the C leg looks like incomplete to me. It could be an A, then the B wave to the downside. If this move is going to end the movement to the upside, then we should expect just 3 waves to the upside, because an ending structure usually gives 3 waves before the fall. So if it's 3 waves, then this is A of it, this is the second wave of it, and the third wave should be a C. So that C wave should give us a 5 waves. That is what we are saying. So if it's going to give us a 5 waves, then we expect this now to be a 1, this is a 2, and this is the third. It has completed the third wave, and this should be the fourth wave. So one more movement to the upside to break the top before they begin to fall. So you are going to look at the level between here and here. That's 2 to 3, 338.4 now. Retracement not more than 50. Then we should look for a buy. CHF, yeah. CHF, yeah. The same thing I expect here too. I expect that this is a full correction here, and that this is going up. So I can see that this is the first wave, this is the second wave. This is the third wave completed. This, if we should pull more down slightly, we'll complete this fourth wave. One more wave to break the top, it should get out. One more wave to break the top, we should get out of this, to be modest, and look for when it's going to fall again to break the low here before you can begin to plan for yourself. They can continue after breaking this top, but this wave is going to break this top. It's not coming down for now. I only see 1, 2, 3, 4. This 4 may come down slightly more. If we should do that, we can load in, because from here to here is already almost 200 pips, if not more. So we can load in to ride the 5th wave, and after that, we look for the sell. Now, last but not the least is gold. Gold now, from what gold is doing, gold is really very, very complex. Yeah, it's very complex. So it's gone up. It looks more like we have finished this as an ABC, that this is not the fourth wave. I don't see this coming to break the low again, except if it takes this low out at 43.48, then we can see it break down one more time. But for now, it looks more of an ending of a diagonal of the fourth wave, as in 1, 2 here, a 3 here, you know, the fourth wave here. This may just be the last 5 waves of the diagonal. Should we get an ABC correction to the downside, then we can look for further buy. So this is just to look for further buy. I think you just follow the correction here. If they decide to take this low, if they take this low, then under this low is where you should be looking for your buy again. So they might take out this low without taking out this particular low here, 45.61. The price should give us a big wave 3 to the upside that may break all of this. That is what so it's bullish now for now. It's bullish, but for now we should expect more correction to the downside. So with that, I've come to the end of this week update. Do like, comment, and share. Share the link with your friends to help us grow this community. Thank you.